Welcome. In today's video, we will be breaking down two bullish reversal patterns for Velo that have been forming over the last few months, and one in fact has been building up for nearly a year, trying to identify a foundational base before continuing the next leg up. There is still much work to do, but we have some very bullish signals here that I wanted to cover today. So nothing that I say is financial advice. Let's dive into the content. So the first pattern that I wanted to analyze was this falling wedge. Now, if you've been following along in my most recent update, we did take a look at this in a bit more detail, but today we're just going to scan over why this 0.008 low has been such a good point of relief and led to the breakout of this falling wedge resistance, which, by the way, guys, is a very, very good sign. You can see that Velo was underneath this falling wedge resistance ever since January of 2025, and it has come back down to a key level of support, which I will identify for us now. So going from the 0.038 high of January, retracing back down to the all-time low with a Fibonacci here, you will see that Velo has come back down to a key level of support on its 0.382. This sits at 0.009. So we had the candle closes a few weeks ago above this level, but did initially wick to 0.008, which was these August 2024 lows. So you can see, scrolling across to the left, we had this wave up, a corrective wave to mark a higher low, and this initially led to this breakout into January 2025. So what we've done is we've broken out from here and retraced back down to this low, but have closed above the 0.382 at 0.009. So this is how, in some sort of way, I've managed to say, well, Velo's at a key level of support here. It's in a falling wedge corrective pattern and has come back down to a key Fibonacci level, which is why I was trying to identify the low between 0.009 and 0.006 or 7. I've been studying 0.007 for a long time now as well. But so far so good. We've come back down to this key level of support. We're breaking out of the falling wedge. And if you guys remember, or if you wasn't here in my last video, we was looking at rising and falling wedge patterns, how to find and use them. And this right here was the perfect example on screen. So you've come in from an uptrend, created a level of resistance, a level of support, and within that level of resistance and support, you've had 1, 2, 3, 4, 5 wave corrections, and then initially look for the breakout to confirm the reversal. Coming back over to Velo, you've had 1, 2, 3, 4, 5 waves down within the resistance and the support, and we've initially had the breakout as of last week. So you can see that Velo has mimicked, or is mimicking, the falling wedge pattern, and this is a bullish corrective pattern, by the way, guys. This isn't a bear market. And studying the sort of corrections today and the prior corrections, here we had a rough sort of 77% correction. The past correction was roughly about the same sort of size, 75%, and the one before that was even larger, and I think was about an 88% plus correction. So the sort of size of these corrections and coming back 77%, as fearful as they seem, aren't uncommon, and they've always led to future impulsive moves. So there's very good signs. Okay, you've got the falling wedge. We've come back to a key level of support. We've broken out of the falling wedge resistance that we've been under since January, and we have also back tested a key SMA since actually breaking out above it. So if you look at this blue line right here, where data started in August 2022, we was underneath this SMA for a very long time until March 2024. This is where you can see that we actually crossed above this blue line and put in a new impulsive wave. Now, we've done something very bullish here and come back to this blue line for a level of support for the first time since actually breaking out. So you can see we broke out, but never actually came back to retest this blue line. Okay, in this impulsive move to 0.038. Now we have, zooming in a bit more here again. Now we have retraced back to this blue line. Ever since breaking out of it in March, we've now come back for a point of contact for support. So when you get above them, retesting this SMA for support is a very bullish signal. So we've come back to this blue line, we've come back to the 0.382 in a 5-wave correction inside a falling wedge, and we've got the breakout. Fantastic signs. It's really good signs, albeit considered there is still work to do, which I will tap into shortly. Now, the second macro pattern that I wanted to look at really focuses on this section of price section right here. So what we've got right here is what I believe to be a macro running flat ABC correction. Now, to break it down a bit more simply without me going into too much detail, if we come over to my X post here, I've said, so it's begun. And what we're looking at is a macro A, B, C correction that also has waves within these waves. So it's quite complicated, guys, but overall this yellow line represents the macro ABC correction, and these white tags represent the moves within these larger waves. Okay, so what you'll notice is if we come over to, in an uptrend, a running flat correction, what we want to see is a point of resistance from the uptrend, an ABC correction in the macro wave A, and then an ABC impulsive move to create the macro wave B, followed by a 1, 2, 3, 4, 5 to complete the wave C. So waves within waves, guys. Okay, now going back to Velo, it's done exactly that so far. So you've got the A wave, which has an ABC, and then you've got the macro B wave, which is an impulsive ABC to complete that wave, and then you've got 1, 2, 3, 4, 5 to mark the macro C wave correction. So in an uptrend, in a running flat correction, it looks identical to what Velo is forming. The structure looks identical, and you'll notice that this wave C low is higher than the wave A. Higher than the wave A. But the wave B high is higher than the resistance point. Again, coming back over to Velo, you'll notice that the wave A is lower than the wave C. So the wave C is higher than the wave A, and the wave B is higher than the resistance point. Exactly what we want to see. Okay, the C is higher than the wave A, but the B is higher than the resistance. Okay, so C is a higher low than the wave A, but B is a higher high than the resistance. Okay, so you've got macro waves within waves, and I think that this is a macro 1 year sort of correction. This has been going on for quite some time. As mentioned, from this sort of resistance point that was first created going over to this week, 350 days, we've been consolidating above 0.007, potentially in this running flat correction. So that was the second example that I wanted to show you guys there, that we're looking good for continuation. Now, there are key levels of resistance above to break, and this is what I want to see before I actually start getting excited for Velo here. So we do have the 20 EMA on our heads on the weekly, on the macro timeframes, that sits at 0.0158, and we also have these key levels of Fibonacci's that I would like to see us break in order to get continuation here to confirm these lows. Now, what I think may happen if Velo can break 0.013, focus right here for a second. You'll see for the last sort of 1, 2, 3, 4, 5, the last sort of 7 weeks, so roughly 2 months, Velo has been struggling to get above 0.013. Okay, it's a very key level of resistance. So what could happen here is we could come back in for a higher low at this point, and we don't actually break that resistance, and then we look to get the breakout. Very similarly to what we did here. Okay, we came back for a low, ran up, but met resistance, and then came back for a higher low before breaking out. Right now, we've come to a low, we've come up. If we meet resistance here, come back for that higher low, then attempt the breakout. Okay, it would be a very similar structure to the July/August lows. But if we do manage to get the breakout of 0.013 and Bitcoin pushes on towards sort of 90K in the near short term, this is where we could in fact see Velo continue this run up towards the 0382 resistance at 0.015. And this would tie in very closely to the weekly 20 EMA, which was, or in fact is, the key EMA resistance that we want to sort of push up to and then see that corrective wave. So if we do break out of 0.013, this correction may not come now. In fact, it may come a little bit later when we're at 0.015. Again, it all depends on what Bitcoin does here, guys. If Bitcoin can follow through sort of 87K, I think pushing towards 91K would validate this move for Velo up to 0.015. However, if it struggles, this is where in the short term, we may come back for the correction sooner rather than later. But anyways, the key levels of resistance to break out of here, guys, do sit at 0.013 as the imminent level of resistance on these candle closes here. So you've got 0.0134. We need to see the breakout above that. If we get it, I think we push on to 0.015 and retest this 20-week EMA. But I would expect it to be met as resistance at this point if we do get the run up over the next week or two before pulling back for a higher low and then going for the break. Don't get me wrong, you can just start getting very impulsive, but we will will come back down just as hard, guys. Okay, you want to sort of gradually, once you've marked or potentially marked the bottom, you want to start working your way up the stairs here, trying to get back to these targets. So key things to take away: break 0.013 this week. I expect the push to 0.015. Failing that, we could come back for a higher low before doing so and build up even some potential. I mean, if I zoomed into the lower time frames, but you could have a potential inverse head and shoulders on your hands here, where we've run into a key level of resistance, and then if we come back to the sort of key level of support on 0.011 in the short term, this could be the structural foundation, because that's all we're waiting for, guys. Okay, if we've marked the low, we're getting this impulsive wave, but we want to see a foundation built over the next sort of few weeks, very similarly to what we did here. Okay, in the past, we marked the lows, but we ran up to a key level of resistance and had to come back for a higher low to create a double bottom and build the foundation before the next leg up. So right now we've got good signs that this is a potential low, but we have key levels of resistance, i.e. 0.013 to break, and also 0.015, which I think are two immediate resistance levels. Okay, so look for breaking 0.013 for the push to 0.015 and the 20-week EMA. Failing that, we could come back to 0.01 if we 11 if we don't break 0.013. So quite a lot to take away, but these are your key fib resistance levels, guys. Get them on your charts. Once you see Velo taking these targets out, it's good signs of starting to retrace to the 0.038 highs. I hope you've enjoyed the content today, guys. From Chart Nerd TA, take care. Peace out.